deepest truth about yourself. All the things you think is wrong is just a doorway to the discovery of your strength. Release yourself to the unknown.
All right, guys, what is going on? What is good? What is good? It is Wall Street Wednesday, March 27th, 2024. And it's a pretty good day. I haven't been up all that long though, but I hope you guys have had a wonderful day today. So far. Let me see. Do we have Shamal, Alex, Nikki, Andreas, or Mia in the chat? That's the question. Do we have any of those 5 in the chat today? Will the real SMS members please stand up? I think Naruto, Vadu, and Alex C are going to be gold here very shortly. Not Alex C, Alex, just Alex. All right, well, I guess they're not here then. Alex C, you are in month 11 though, which means you should be anywhere between tomorrow and the next 2 to 3 weeks. I don't know. But you're very close to the gold sniper. But the other 5 that I mentioned, they have it. They're just not in the chat. But what's good, everyone? Naruto, Lucas, Eli, Sean, G, Carlos, 2020, Felix, Lee Bright, Maximiliano, Dante, hello. Willow, what's good? Oh, there's Nikki. Let's go, chat. Let's go. Nikki's in the building. Look at that gold sniper, man. Look at it. Look at it. Ain't that something? There's our first one, chat. There it is. There it is, chat. And that's what that looks like, my friends. That is the 12-month, the 1-year loyalty badge on this YouTube channel. That's what that looks like, my friends. Super clean, super crispy. Man, I didn't think we'd react this hard off this imbalance. That's interesting. But yeah, I like it. I like it. Love this group. I love our noon calls. Proud to be here. Well, I'm glad you're here. I'm glad everybody's here. So, I was gonna say something to the rest of you guys, to the rest of the 1-year members, but they're not here. So fuck them. I'm just kidding. But what I was gonna say is, for those of you that get your gold sniper, I sent you guys a subtle gift. A subtle gift. So it's for you because you earned it, and that's that. And I won't talk too much about it because then everybody's gonna start asking, what is it? What is it? So anyway, the S&P today, you know, honestly, I don't know. I want to be short, but at the same time, I don't. I want to be short, but at the same time, I don't want to be. We have equal lows from the AM session and pretty much lunch is open, right? Which is only like 3 points away anyway. And now it is. And micro doesn't. Micro ended up having a lower low here. So this might be a low if you're looking at the micro side. That's hard to trust because there's equal lows here. So what do I do with that? And then at the same time, it's like, okay, before the stream started, I was like, all right, well, you know, what do we have up here? And we have a nice formation up here for a potential mitigation. Then you have these down candles here. I'm like, okay, well, you know, price could trade up into that. At the higher end, we have an imbalance up here too. But we have this lower one as well. And that's why I marked, that's why when you saw me pull this up a second ago, that was the only markup here was this imbalance. And I don't know what to do with that. No, I'm not Carlos, I'm not giving away funded accounts. Not like that. To that degree. I've given away some challenges before, but not like that. Because there's a lot of you here. There's over 130 something of you, which means there's gonna be like a wave of gold snipers over the next couple of weeks. And I'm not doing that for everybody. You know? So yeah, nah, bro. No. But yeah, what do you guys think? Have you guys been watching the indices today and yesterday? If we look at Nasdaq, this looks absolutely awful. So our equities open, immediately traded 200 points lower, almost 200 points lower. We consolidated all through pretty much the rest of the AM session. We rallied a little bit during lunch, and now we're just back within that consolidation here. I mean, I guess we could argue that S&P has a lower low and the Nasdaq has a higher low. I mean, you could note that if you want. Nasdaq is also the weakest index today, so I would just be mindful of that if you're trying to long. I would be very careful about that. But drop a like, guys. Drop a like if you're here. Drop a like if you're not here. You know? Just do it anyway. Just do it anyway. The Dow is made no new lows today. We'll go over yesterday in just a minute because that shit was funny yesterday when in the market review. It was so funny yesterday. We have this higher imbalance here, but you typically don't want to short the strongest index. So that's kind of where the crossroads are at. Crossroads, chat. We do have a premium imbalance, but what's the distribution? Don't see it. What's the downside objective? I have no idea. I couldn't even tell you. I couldn't even tell you, chat. Maybe those lows. That's kind of hidden back in there. So if it's not super obvious, probably not worth it. So that's where I'm at today, chat. That's where I'm at. I guess if I don't think this is going to happen, but if I had to tell you what I wanted, it would probably be leave the lows open for now. You know, let the market make a low here. Get traders thinking it's going to go higher. Right? Rally it a little bit into that 15-minute mitigation. I think that 15-minute imbalance is up here too. And then rip it lower. That's probably what I would want to see if it were me. What's good, Harmon? So at a point like this, 16 minutes into the PM session, I'm hesitant to long because of the lows. I'm hesitant to short because we are not in a higher time frame premium. We're in a discount at the moment. So, you know, it's like if you have some sort of filtering system or some sort of checklist or, you know, criteria, I don't really see any reason to trade this at the moment. Am I making sense, chat? Or does it sound like I'm just talking just to talk? Lee Bright says same situation. Naruto doesn't make sense. Yeah. So I know a lot of us, we have itchy trigger fingers, right? We wanna trade something. You know, show me a trade, John. Oh, I want to be able to push buttons. It's not about pushing buttons. It's about making money. You can push buttons all you want, but that doesn't guarantee that you're going to make money, right? Sometimes trading less will do you more in performance. Whenever you want to buy and sell at the same time, we're in low probability scenario. I agree, Lee Bright. That is a solid gem. I agree. Very much so. Which one do you trust more, micro or ES? For example, as you pointed out, MES took the low, ES didn't. So G, I like the question. I've been asked this before, but I'll put it out there again because I know people join, people leave, we get new people, whatever. So I get it. I trust, if I had to say, it would be ES more so than micro. I don't think if you were, let me just put this in the way that everybody's going to understand. If you were to rob somebody, are you going to go to the poor neighborhoods or do you want to go to the rich neighborhoods? What would be more lucrative? Now, don't put too much thought into it. Oh, rich people have more security. Like, don't think about that. Just think about if you're going to rob somebody, would you rob some poor people or would you rob the rich people? What is more lucrative? Are you going to rob the poor people because, oh yeah, man, we're going to take their fucking mattress money, the little $200 under the mattress? Or do you want to be like, nah, bro, we're hitting up the rich neighborhood because it's 100 times, 500 times more lucrative to rob rich people? I know. Just an example, okay? But you get what I'm saying. And that's my point. The micros the value is $5 a point. ES, it's $50 a point. So literally ES is 10 times the value of the micros. Okay. So if you were, let's say, smart money for example, okay? And your job was to make the market. Your job was to say, okay, you're going to come in here and offer, you know, price basically. That is a visual on what the difference in the worth is between the micros and E-mini. That's the difference. Micro is $5 a point. It's a good introduction into futures, right? $5 a point is not going to smack you, right? $5 a point, not bad. 10-point stops, all right, $50, okay, not a big deal. A lot of people, I would say $50 isn't too big of a deal. E-mini is $50 a point. So now that 10-point stop goes from $50 to $500. That's a little bit more, you know, most people are going to say, I don't know about that, Chief. Right? So again, if you were smart money, if you wanted to make the market, if you wanted to finesse traders, who would you finesse? The small fish down here, or the big fish, the hedge funds that are hiring goobers right out of college or whatever, you know, Benjamin Bollinger bands trying to, you know, short highs and bot, or, you know, dumb shit. You would want to take the big money, and that's why that's the long-winded version of why I trust ES more than micro. All right. So if I was somebody who was only trading micros, only looking at ES, don't want to look at Nasdaq, don't want to look at Dow Jones, that's why I said a minute ago, in the traditional sense, this was the mitigation model. Because just based on that, low, well, we'll use the lower one. There's a low here, a third low, and then that fourth or fifth, however you want to count it, there's a bunch of lower lows here. We shifted in price delivery during lunch. So it's like, okay, well, oh, we broke structure to the upside. We have an imbalance up here or whatever. Or even the morning session high, equities high, whatever. That by itself, to me, is a long position. It's a long position. Based on the mitigation model, it's what? 70 or 52.75 to 52.70. It's only like a 5 or a 6 point stop. Oh, hell yeah. That's cake. That's cake, my friends. That's only $250 risk on an E-mini. Oh shit. All right, we can do that. But that's what I'm saying is, if this ends up coming back down, or even on this leg here on the 5-minute time frame, could have easily gave that up and then ran this low because of ES having those lows here. And that's why I marked it up over here too, because I wanted to point out that imbalance here. This could be held open in the short term. Okay. Now, that is one thing that I'm not entirely accurate with is how long do I expect lows or highs to be kept? Like, are they going to keep this open for the AM session and then run it in the PM session, or are they going to leave it open and then run it tomorrow? Like, I don't have, a super high accuracy with that. It's hard. I mean, you try telling somebody the setup before it forms. Oh yeah, I'm going to wait for the mitigation model to form inside the PM session and then wreck the final hour. You try and fucking do that in front of people over and over again and see if you don't have a slight, you know what I'm saying? Like, come on. And that's why when I gave you the mitigation model a few years ago, and some of you got it recently or whatever, who joined and then watched the video, that's why, or one of the reasons why that model is so powerful is because you're waiting for all of that stuff to happen. And then you're getting in right before, the next move, right? So that's why I'm saying, and I told you earlier, hey, what am I looking for? If it was up to me, I'd say leave this open for now. Let people think a low's been made. Run it higher. Get people trying to pick bottoms in markets. Run it and then rip them a new one. That's why I said that. Because that's the idea. If we did happen to be long, right? Which I'm not. I didn't long this. But let's just imagine for a second, okay, well, John, I long the imbalance or even that next candle entry. Okay, cool. We should start to see a higher high. If it's going to trade higher, then we should start seeing expansion relatively quickly. Large up candles, small down candles, whatever. And we'll watch it together. But I don't know. I wouldn't feel too great if I was long from here. I wouldn't feel, even if it's up 4 points, 3 points. I just still would not feel okay having those lows there. Logically, it doesn't compute well with me. Rules are rules, man. Rules are rules. Lucas, I don't even know what you're talking about. I would leave the money behind and take the books with me. I don't even know what we're talking about here. Is trading gold and silver as a beginner a good idea? Sometimes it seems like they move weird for me compared to currencies. Well, I'll tell you this. A long time ago, this playlist isn't available anymore. Well, at least for the public. But a long time ago, I put out a video and it was based on only trading metals. Well, gold, basically. The title was If I Only Had to Trade Gold. And so I basically went in, for 30, 45 minutes. And I said, look, if I was confined to only trading that, hey, John, it's Citibank. We're going to pay you $1 million a year to trade or whatever, plus your bonuses. But we already got futures traders. We already got currency traders. We need somebody who wants to trade gold, and that's it. Like, that is your limitation. I'd say, okay, this is how I would do it. So in short, no pun intended, what I talked about was basically the strategy. Like, okay, what would I do? And the predominant focus for the metals, it was relative strength analysis. I would be looking at gold and silver all day, every day. I'd look at both. Probably have one screen that had a daily and weekly on it. And then I'd have, what I have over here, the 5 minute, 15 minute, 1 minute, shit like that. And I would only want to long the leader. Well, if I'm only trading gold, I guess that would be it no matter what. But I would want to long gold if it was strong. I'd want to short gold if it was weak. I would only want to be looking for, you know, like I always talk about, runs on liquidity. Like, say for example, and we can update this. What I told you guys yesterday, right? I said I didn't want to see us trade back into that red box up here, and we did, right? I didn't want to see that. But at the time, what I was telling you, and I explained all this yesterday, you know, there's your first leg lower, and then this, to me, could have been the second leg to go lower. So I would have been looking for shorts, right? And then, as mentioned, you know, we rallied up, traded lower, and then there's your imbalance within the old imbalance or within the higher time frame imbalance. And then, you know, that would have been a clean short, probably a partial at a new low, probably a partial at this imbalance, and then I would have probably broke even on the rest of it during London. London always does some bullshit. So, you know, that probably would have been it. But I'm looking for the same things in pretty much every market. You're looking for accumulation, you're looking for lows and highs to be ran or whatever. And I did forget to mention this yesterday too, but gold actually is outperforming silver. So silver is actually continuing to trade lower, where gold is actually still continuing to trade higher. So this probably wouldn't have been the greatest short anyway, given that gold's the leader on the upside, at least price action wise. So, you know, you gotta kind of relax it a little bit. But basically, I'm giving you another long-winded answer of basically saying, look, price is not just fractal, but it does the same things in every market. So as a beginner, I wouldn't really be too worried about, well, should I trade this or should I trade that? I would focus on the things that I show you because they are universal. The mitigation model, it's universal. Liquidity, it's universal. It doesn't matter which market you go to, these ideas are going to be there. Okay? Futures and like the indices, I started off in stocks in 2014. This is kind of like, you know, my origin, okay? The futures market is, I don't want to say confined because that's kind of that has like a negative connotation to it. But what I mean by confined is the indices have that window, right? The PM session is 12 to 3. It's a 3-hour window. We have the information from London. We have the information from the AM session, and we have information from lunch. This is the final session of the day. So we got tons of information to work with. We've got liquidity swept or liquidity built or both. So we got information to work with. We have a 3-hour window, so we're not spending too much time on the computer. I still do, but in a general sense, that's the idea at least. And you're not going to probably be holding trades overnight or too long. So you're not going to be waking up in the middle of the night thinking about your position because you fucking over leveraged because you're a beginner or a intermediate trader, you know? So there's a lot of things that make me comfortable with indices and being able to day trade them or even swing trade them in some cases, like maybe the option side or whatever. But, you know, some people are like, oh, I don't know how you guys trade this or trade. I don't know how you guys trade fucking cross pairs, but when it comes to everything else, you know, I get it, dude. I get it. If you want some notes for gold, I'll tell you. I'll tell you. One of the things about gold, all right, I've said this time and time again, but I'll tell you. Gold, in my opinion, this is just me based on damn near over 10 years of experience. Gold is the most manipulated asset there is. It is so manipulated. It is absolutely insane. it is disgusting. Like, it's wild. Okay? It's absolutely wild. Now, when you first learn that, you might be kind of scared or worried about it. That's not the case, bro. If you really understand manipulation, that's a good thing. When you understand that the game is rigged. It's just like with anything else. Everybody knows that I hate using a casino as a means of analogies and such, because trading and gambling to me are two different things, and we can debate and talk about it, but we're not going to do that. But say the casino, for example, everybody knows the casinos make money, period. They know that. Everybody knows. They still go, they still blow their money, they still waste their money. Everybody still goes, even though you know the casinos make money, because it's rigged. The way those games are designed, roulette, all this other bullshit, okay, you know that it's rigged in the long term in their favor. And they lose money a lot, but they make money a lot too. And given the fact that casinos have a high turnover rate, you know, the dealers are moving fast, right? They expect you to make decisions quickly. They're spinning that wheel quickly, you know, take all the chips, put more chips on the table, keep spinning, because it's a numbers game. It's a volume game. Because you might have to Google this, but the percentage of like roulette, it's only in their favor, I think 55% to 45% or something like that. It's not a high edge. And that's why they're volume based. They got so many tables, they're running so many games, and they're going to let that little 5-6% edge work itself out over a long period of time, because they know that the math is the math. That's why they put that green zero or the 2 green zeros in there. They toss them in there for like no apparent reason, right? No, it's because you never are going to put money on that stupid shit. And then eventually what happens? You're playing, you're doing your thing, and then bam, 00 comes up and you're like, oh, fuck, man. What the hell is that? That's the math. That's the edge working itself out. It's rigged. So if you could put money on the house, I would do that. I would absolutely put money on the house. If there was some sort of bet where you could go, okay, John, you know, there's casinos and then there's players. Who do you think's going to win? I'd say casinos 10 times out of 10, because I already know that's how it works. And that's what I would put my money on. That's kind of how the market is. I understand the market is rigged. It is absolutely rigged. It's controlled and at times manually manipulated. So what am I going to look for? Manipulation, and then some sort of this looks kind of horrible. I'm trying to find something a little bit better for you on like a short term. Say this, for example. And again, this is just for example's sake, okay? This is not something that I'm telling you to study outright. It's just, this is today's price action. You look at this and you go, okay, market traded higher, and then right before New York, okay, cool, we got a sell-off. So what has taken place on the way down? Well, we have some highs here. We just have lower highs and lower highs. So when the market at this particular point makes a lower low here, right? Where are the stops now? If you had stops up here, they got moved. Oops. They got moved lower, or moved to this high, or they got moved to this high, or even this one here, right there. When the market traded lower, right? Everybody wants to push their stop. I do it all the time. right? Because you want to lock in profit, of course, but that's trade management, money management. That's a different topic. On the topic of manipulation, you look at it and you go, okay, that's a lower low. So at this particular time, that's a trending market. There's a channel, there's a trend line, there's some form of analysis that traders are going to think is going to continue lower. Okay. But no, it ran a previous low, consolidated. That is kind of looks like accumulation. It rallies, retraces. Okay, take a look at it. Take a look at price delivery. I'm going to pause just right here. I want you all to see this. Now, this is hindsight. I haven't looked at this earlier, but I want you to look at this. When we talk about price delivery, I want you to look right in here. Okay? From this move down, because that's the high and then the leg of moving below this low. If my camera's not in the way, right here. Okay? So look at all of this information within this gray box. Look at it. And Tiago, we'll take a look at it in a minute. I want to get this out of the way, though. That was related to your question about attacking. Oh, rich or poor people. Oh, yeah. Books are heavy, though. So you could only get away with a few books, and then you're out of there. Yeah, I'd probably take a couple books, dude, if it was up to me. Not that I would ever go and rob people, but it was at least a fun analogy. You make 5 cents for every dollar bet at the casino. What's good, Stephanie? What are you guys seeing here? Do you guys see anything? What's happening right here, my friend? What's that? That is an imbalance that was respected to go lower, that got traded through. Yes, 2020. Then the market came back into it. That's a inverted imbalance, and it does that one more time. Body's respecting that. That's basically, to me, it's like a signature of algorithmic price delivery. Meaning we have shifted, right? We have shifted from bearish to bullish at this particular price point. And this is what a lot of people don't understand about breaks of structure, and why I was one of the only ones that ever said you don't need a break of structure before everybody else started saying that. Right? A lot of people learn from me and don't give me credit, but it's cool. This candle, okay, trading above that imbalance and closing it, that is, in my opinion, also a shift in price delivery. This bearish imbalance is no longer bearish. That's a bullish signature in price. It doesn't need to trade above this high, or even this one. Oh, well, we're going to wait for a break of structure. Yeah, that's something a fucking beginner says. And I'm not trying to talk shit about you if that's what you look for, but you don't always need that. Okay? So, just point that out there. This is still, something that is tradable, either that first, like when it trades into that here, or even that second time. Either one of those. It's an inverted imbalance. Bodies are respecting it. Stop could probably go to this low if you believe that's manipulation. And then what happens? Well, fuck, dude, take a look at it. It absolutely rips higher into this imbalance over here from that sell-off. That's a premium imbalance as well. So, like, to me, that's tradable. Inverted imbalance, that's probably too close of a partial, but I would say at least the current New York session high, that high, I'd probably take a partial. And then this imbalance up here, I probably would have taken a partial right there too. So entry in either one of those, exit at a new high plus like 1 tick or 1 point if you're looking at futures, or 1 pip if you're looking at Forex, and then 1 point pip tick into the imbalance there as well. So it's like buy low and sell high. Done. That's how I would go in with gold if I had to trade it. Make sense? That's the kind of stuff I'm looking for. Manipulation on the downside, and then potential manipulation on the upside as well. And that's it. That's all I would look for. You know, obviously given other stuff like the top down analysis and, you know, start from the weekly, daily, of course. But on an intraday basis, that's exactly what I would do. But matters not what asset. Okay. Let's take a look at ES. Man, it hasn't done anything that whole time. I would definitely not want to be long now here. It's spending so much time not going higher. Right? It's like, oh, wick entry, great. Hasn't made a new high and it's been doing nothing. That's concerning. That is concerning, my friends. What's the difference between consolidation and accumulation? Thought they were the same. Okay, so if I confuse you, I apologize. That was not my intention. A consolidation can be accumulation or distribution, in my opinion. It just depends. So I want to try and find a better example for you. Matter of fact, let's do two birds, one stone here. All right, let's get back to this. All right, so we're going to spend just a minute here on Carlos, on his question. What's the difference between consolidation and accumulation? So do you guys remember yesterday what I taught you? What did I teach you yesterday, chat? Put it in the chat. What did I teach you yesterday? Again, it wasn't brand new, but for some of you it might have been. But what was the topic for yesterday? What I was telling you, this is the trade that everybody wants. What is the trade that everybody wants? Can't find the Wyckoff video you spoke about yesterday. Dalvin. What am I going to do with you, my friend? What am I going to do with you? There's your video. It was a live stream. That's probably why you couldn't find it. It has a thumbnail of a map. And it was a live stream, so that's probably why you couldn't find it. But it's there. If one of you could click on that link and just make sure it works, that'd be cool. Because I got that from the back office, not the front page of YouTube. Like my channel, it's like my back office shit. Okay, thank you guys for that. Good thing we have a search bar. I mean, fuck, I have like 500 videos, bro. So thank God we have a search bar. Need that. But okay, so coming back to what we were talking about. The two legs, right, Lucas? The second leg is what most traders want. First leg, second leg, says Felix and Dante. Ibrahim said second leg is the fastest move. That's a good point. Thank you for that. The second leg often comes after price passes the 50% and crosses back, depending on which direction. I agree. So don't you think that was funny yesterday with the Dow Jones? What did it do? I told you yesterday why I didn't want to long. Why I wouldn't have longed down here, even though it worked. Because what did I say? The PM session, Monday's low, it wasn't taken. We didn't take Monday's low. Right? Until the end of the session. That shit was funny, right? That shit was hilarious. Why though? Because that was the second leg. That was literally the same day that I taught you. That was the first leg above London's high to go lower. I don't know if it crossed 50% or not. Doesn't always have to, but it's usually better if it does. And then what happened? We'll pay attention to these highs right up in here. Let's take this off and let's take this off because you know this is the second leg now. But look at this. You have a high, a lower high, a lower high, a lower high, a lower high. So what happens here? In the final hour, nonetheless. Wonder if anybody's ever made a video on that. Those two highs right there. What happens? Trades right above that. Just a tick, one or two ticks. Right? I'm not your teenage mentor. I'm not fucking Twitter telling you it has to be a deep run. No, it doesn't. No, it does not. That is enough for a stop run. Well, if we've already traded lower, if we already have liquidity up here, and if I told you Monday's low was something that I wanted that we didn't get, what do you think is likely? Whoop. Second leg distribution. On the same day I taught you the lesson. That I didn't do on purpose. That was honestly luck because I would have told you I was looking for shorts and I wasn't. But it's just funny that that's how it played out. That was totally unscripted. Okay? This is unscripted. But it does make me look cool. Not that I need that, but anyway. That's what that is. Now, if we look in here, okay? If you mark up consolidations, okay, usually like prior to a session or like even the lunch hour, you'll see consolidations. Let me give an example of what I mean usually when I say distribution, okay? Why would I call this distribution up here? Well, John, we're looking at a chart and that was the high of the day, so that was distribution. No. No. That is like the first initial response, like, oh yeah, well, you know, it's an old chart, it's from yesterday. You know, that was the high of the day, so that was distribution. Okay, but what happens when you see this? You're in a premium. We haven't broken structure. We're closer to the high of the day. How do you know if that's distribution or not? It's always easy to look at it in hindsight. It's always easy to look at it in hindsight. But when you're trying to place a trade with live funds, of course, but when you're trying to trade with live price, like it's ticking up and down, now it's a little bit harder. Oh, well, I don't know if this is distribution or not. Well, one of the signatures, I wrote about this in my book. It came from Larry Williams. I teach you guys this all the time. If we look at, that's the December contract. What is it? NQM 2024. There's that. And then what is it? ESM 2024 new price scale. Okay. If we just warp this a little bit, I can mess around with it just to make it clean and crispy. Okay. This is how you know. All right. Actually, let's clip this today. I haven't clipped a video. I didn't clip one yesterday. So this is the key right here. Okay. This is the key. This is how you know. It ain't going to be 100%, but it's very high accuracy. Okay. When we look at the three indices together, or if you look at Euro USD and GBP USD, if you look at AUD USD and NZD USD, Aussie and Kiwi, or if you look at, as I spoke about earlier, gold and silver, it's the same with the indices. Well, the only difference is with the indices, you got to look at all three: S&P, Nasdaq, Dow Jones. If we take off all the markups and if we're just looking at price, okay, time, price, context, it's really all you need. What's here? Okay, look at the highs formed. The orange one, I don't remember which one is which, but I know the candlesticks is Dow Jones, and I think S&P is blue and Nasdaq is orange. So at this particular price point, point in time, sorry. At this point in time, 10:55 a.m., what is taking place? Well, there's London's high from Tuesday here. And at 10:55, right before lunch, well, Dow's trading higher. We can see that visually. It's right there. Boom. That's a higher high. Okay. That same high, whatever, I guess, time point in here, at 10:55, Nasdaq in orange is lower. S&P in the blue teal, that's lower. So the Dow Jones was the only one of the three, the outlier. Only one of the three is doing one thing. Why is that? Why on earth would that happen? That is distribution. Smart money distributes above old highs. They sell above old highs. They buy below old lows. They distribute below old lows. So when we have, especially like a high and then that higher high on the small time frame, right? Like this, like a small time window is about an hour right here. But on the macro view, you just zoom out a little bit and you go, okay, well, that's London's high being taken and the other two indices are dirt. That is how you can say, you know what? That's probably going to be the high of the day. If we get a sell-off, in which we do, even though this is during lunch, but there's an imbalance right there. Okay, so I said London high here, imbalance here, it trades lower, and then the PM session really didn't do much until what? What's up here? Time, price, context. Well, we've already got price. I just walked you through that. The context is we have opposing liquidity that I did mention on the session. I didn't say we would trade lower, but I mentioned that Monday's low wasn't taken. So what is the time? Well, the time is the final hour. The last 60 minutes of the equities market. There's your move. That's not only your second leg, but that's manipulation. That's distribution. All right. So the whole point of this clip is that's how you know this is distribution. It doesn't have to consolidate up here, and it probably won't. Why do you think price spikes right there, trades off of it? Spikes up there and then trades off of it. It doesn't spend a lot of time above the old high. Well, look at it, dude. Price is so extended higher because the other indices are lower. It's just up there to distribute. And they're probably shorting that too, shorting above old highs. Okay. Cool. And that was under 5 minutes. That's going to make probably a good short-term video clip. Okay. So as far as accumulation goes, when I talk about like the sequence of accumulation and then manipulation, that's a little bit different because you do kind of see that here just to an extent. I mean, it's not a very clean consolidation. Like we have a general consolidation here, and then it does happen to rip higher to go lower. Like that's classic accumulation, manipulation, distribution. Okay, it's a sequence. It happens in that order. It accumulates or consolidates, rather, because they could be they could be loading up shorts. They could be shorting the market in here, just holding it, and then run the stops, short it one more time, and then it absolutely dominates lower. Dominate. I mean, dude, look at these down candles here. How many do you have, bro? It doesn't turn around at all. The actual higher high is here at 215. So that's the down candle, and then the second one, the third one, the fourth one, the fifth one, the sixth one, the seventh one. And then it took until the last few minutes for it to pop a little bit, and then it continued lower below the morning session low. Right? Because it's moving so aggressively in that final hour. All those shorts were piled on in here. They shorted above these old highs. Okay, traders are giving up their position here. They're being stopped out. Most traders get stopped out before the big move. It happens. Happens to the best of us. It gets me sometimes too. It's okay. It happens. But, you know, that's that's distribution, right? They're distributing longs, right? They manipulate it in the morning, bought it on the way down, sold it on the way up. That's just what smart money does, okay? We try to do that. We don't always get it right, but that's, you know, what we want to do. Align with smart money. That's why I titled my book that way. Felix got out the last spike. Dude, Felix is smart money, dude. Felix is smart money. So I'm trying to see if I can find really a more clean example of what I'm trying to show you. See, the S&P hasn't done shit either. It's rough. Let me go to currencies for a minute. Usually currencies will have you know what? This looks pretty horrible. But again, just for example's sake, I want to at least give you something. Here's your accumulation, because we don't really do anything during New York here. New York doesn't really do much, but then what does it do after? Well, it consolidates, then drops lower, but then reverses to trade higher. Accumulation, manipulation, distribution. There's an imbalance up here. That, you know, again, this is just hindsight. I'm just looking at it, right? Probably mitigation here as well. So when price consolidates, it can also be accumulation. You might not be the one accumulating. You got to remember this, okay? This will be the last thing, and then we'll hop off here. You got to remember, what we try to do is we try to buy low and then sell high. I know that sounds obvious. Wow, John. Do I got to write that down? Buy low, sell high? That's obvious. What I'm saying is we try to get maybe one order or two orders. Well, I'll buy it here and I'll have my stop loss here. I'm not going to buy it and 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 then wait for it to mark up and then sell it, sell it, sell it, sell it, sell it. Right? I'm not doing that. Some people do trade that way. I don't. But you know who does? Smart money. Okay? We, again, try to trade where we want that sniper entry. We want to go all in at the low. Smart money's not doing that. They're scaling in and then scaling out. Right? So that's why you see that in consolidations. They'll buy it, they'll buy it, they'll buy it, they'll buy it, they'll buy it. And their average price will probably be right in the middle of consolidation. Doesn't matter. So when they run it lower, why do you think price drops down right? Below consolidation. And then that just happens to be the low and we trade higher. Why do you think that? The orders in that consolidation are going to be in drawdown as the market runs it lower. But shit, that's only like 5 or 6 pips. It's not like a super big deal to these people that are working with more money than you'll ever see. You know what I mean? These people control the market, dude. They control it. They have shit. They even have, there's algorithms out there that move price on the smaller time frame, which they employ those too. So those algorithms are in there buying up price, buying up, buying up, buying up, buying up. And then selling it on the way up. Imbalance, selling it on the way up, selling it on the way up. You might not trade like that. I sure as fuck don't trade like that. But that's what they do. So if you ever think about that, okay, go do this. Okay, go do this. Ooh, that imbalance is starting to become traded to, isn't it? Yeah, it is. Told you. Trying to long with equal lows. Good luck to you. Let's go back to yesterday. I lied. Let's go back to Monday. That's all I was looking for. Look at it from this perspective. The perspective I just gave you. Okay, you're going to have to shift your mindset here. It's not going to make sense at first. You're going to go, I don't know what you're talking about. Think about it, chat. Work with me here. Let me use a highlighter because this shit's going to it's going to take too much time. Let's just say they bought it. Or excuse me, sorry, shorted. Let's say they shorted the market, shorted it, shorted the market, shorted the market, shorted the market, shorted, and then even shorted above that old high. If you think about it, 5281, okay? This is just a logic. I'm not trying to make you shit yourself like I did yesterday, but watch this. And we're not going to do like really, really heavy math here either. But let's just say, for example's sake, they shorted all the price action in here. Every few minutes or so, they're just piling on shorts. Shorts and shorts and shorts and shorts. One contract here, 5 here, 10 here, whatever. Okay? And they're shorting that or buying it. Doesn't matter, to be honest. Their average price is probably around the middle. Right? You would think if you transaction down here, if you transaction up here, your middle price is somewhere in here. Right? When price then dumps, right? It aggressively dumps lower. What happens if you're long at 5284 on an average price basis? Well, when the market trades down to 81s or the 80s, if you're long in here, your average price is higher than the market, which means you're losing money here, right? So you need it. You need the market to trade back up to 5284 and above it to either squeeze out a profit or to get out of your longs if you happen to long that market, right? Does that make sense or no? Drop a 1 if that makes sense. We're almost done. Drop a 1 if you guys are with me so far. Or still with me. We've been here an hour, a little bit more. So if you are long and your average price is this, if the market sells off, that move lower has now told you the market is saying, hey, my friend, you're on the wrong side. you're offsides. I don't know who watches the NFL anymore because sports fell off pretty hard. But if you ever watched football before, what happens if a player is offsides and they realize it, they back up, right? They go, oh shit, I'm offside. I got to get onside. Well, the market trading lower aggressively like that towards these equal lows is telling you, hey, I'm getting ready to go lower. I'm getting ready to distribute. I'm getting ready to take price and deliver it lower. The algorithm saying, hey, look, here's price. I'm about to jam it down. But what I'm going to do, and I'm speaking as if I'm the algorithm, okay? Hey, my friend, you're net long, and I'm about to rip this bitch lower. But you know what I'm going to do for you because I'm so gracious, because I've been coded to do this? What I'm going to do is I'm going to rally it either above it or very close to your average price. So you know what I'm going to do for you? I'm going to allow you to get out of your long positions if you longed it on the way up. Because the day's been bullish, right? So I know you've been buying it. But you've held on too long now. You've held on too long, my friend. But this is your courtesy call. Good morning, right? This is your courtesy call. I'm giving you that signature with this move lower to say, hey, I'm getting ready to drop it. But what I'm going to do for you is I'm going to rally it one more time. So you, whatever your average price is, even if it's lower or higher, whatever, just assuming it's around 50%, whatever, I'm going to jam it up there. So you've got a few minutes. It's a 1 minute time frame. So you've got a few minutes to do what? To get out of your position if you're net long. If you are net long, you have a chance to get out of here at break even or maybe a slight profit if your average price is a little bit lower. Okay? Well, let's make the case for sellers. Let's make the case for sellers for a second. You sold a new high. You sold a new high. You sold a new high. And then you sold a new high. Right? Selling above old highs. Let's delete all this shit because we're getting kind of messy in here. Okay? But look what happens. Your morning session high. And then you have this, right? Why do we consolidate around that? Have you ever noticed that? Why is it consolidating around these old highs? It's being held there for a reason. And then that was the high of the day, wasn't it? Oh yeah, 3 p.m. is down here. Right? That 2 to 3 p.m. time window is here. So tell me, chat. And you don't have to put your answer in chat. I just want you to think. Put your thinking cap on for a minute. Why do you think the market consolidates, right, and manipulates right before the final hour? Shows its willingness to go lower, rallies it one more time, because like I mentioned, the market's handing you, it's telling you its hand here and saying, look, I'm about to rip these lows. But I'm going to be courteous and I'm going to allow you to get out of your longs before I rip everyone a new one. Why do you think when I gave you the mitigation model or an imbalance model, why do you think the entry is shit like this? It's a gap. Why do you think? Because it is the opportunity to, again, just like I said yesterday, to get in the market before the move that is supposed to take place. whether it's smart money driving price or whether it's the algorithm going to deliver price lower. Either way, I'm not somebody who tells you, yeah, just short it all day. Just wait for equal O's to form and then just short every price level. Just take random fucking shorts and just hodl. Hold on for dear life. Because eventually the lows will be swept, right? Well, that's not always the case. Because sometimes it could keep going. But when we see manipulation on the opposing side, then we get that willingness. It's that basically that courtesy move. Make sense? Before we hop off here, I need you guys to understand if this makes sense or not. I'm freestyling my lessons here. I don't have a PowerPoint or anything, but we talked a lot about accumulation, okay, distribution, manipulation, and I probably didn't explain it the greatest way, but again, this is just off the top of my head here of what I look for in price and kind of like the reason behind it. So when you understand that price is consolidating, something is, fixing to get ready to pop off. But it's almost always in the opposing direction. Meaning, and you've heard this before, if it's going to go lower, it's going to go higher first, right? If it's going to go lower, it's going to go higher first. These are kind of the little maxims and the little sayings to remind you that this is what the market does. But it's trying to, I guess, use a language or use a verbiage that isn't, super complicated and complex. It's supposed to be up to you. Oh shit, maybe we did hold that. Look at that. Maybe we did hold it, chat. Well, no skin off my back, my friend. I'm not long. But what do we want to see? This imbalance and then this mitigation here. And I said, this imbalance is within that. I wanted to see that first. So I guess it did hold. But look how long that took. Look how long this sat in that imbalance, bro. I can't stand trades that do that. Entry at 12.25 and it doesn't really pop off until 1:20. It took an hour to do that. Ugh. All right, well, I guess maybe I was wrong on that then. But now I would probably start looking for shorts if we get up into here. So that is what I'll leave you with, my friend. We have, again, this mitigation. We have an imbalance on the higher end of it, so we'll see. All right, I'm going to hop off the stream here. But I would, if I had to say, pop into that and then drop it. Something like that is what I would look for. Okay? So with that being said, hopefully you guys got some value. If you got some value today, drop a like on the stream for me. If you got some value, drop a like on the stream for me. Oh, the Dow didn't trade higher. Oh, Nasdaq, what are you doing, dude? This is horrible. But the S&P is higher. I'd probably note that too. But yeah, that's going to be it, man. I'll put out the market review tomorrow for Thursday. And then we'll be here same time, same place on Friday. And no, Lucas, I don't think it's going to be changed. I get that question a lot. Well, I used to get that question a lot. No, it's been the same. And nothing, I don't think anything's going to change. Okay? So I'll see you guys on Friday. If I can find a good outro song.